This is a story of two brothers, a country bursting with tech ambition, and billions of dollars in digital currency that didn't just get lost. They disappeared without a single alarm raised. No explosion, no server failure, no coup or fire, just silence. And it all happened in South Africa, not in Silicon Valley or Shanghai. Two teenage boys. One of the largest cryptocurrency collapses the world has ever seen. And more than $3.6 billion in Bitcoin, gone like vapor on the blockchain. This is the unbelievable tale of Africrypt, a company born from a fusion of youthful genius and digital illusion. And how two kids, Ameer and Raees Cajee, built a financial fantasy, then vanished into thin air. Johannesburg, the economic heartbeat of South Africa, a sprawling city of finance, risk, and relentless hustle. Among its many dreamers, Ameer and Raees Cajee stood out early. Raised in a household that valued education and technology, they were already tinkering with computers while other kids played video games. By their teens, they weren't just reading about Bitcoin, they were mining it. They claimed to have been in the game since 2010, long before most people had even heard of Satoshi Nakamoto. Raees, the older brother, quickly became connected in crypto circles. He even visited Huobi, one of the largest exchanges in Asia, before turning 21. In 2019, they made their boldest move yet, launching Africrypt. Ameer, only 17, was the tech prodigy. Raees, 21, the operations and strategy brain. Together, they pitched a platform that did more than store your Bitcoin. It promised exponential growth, driven by artificial intelligence, machine learning, and algorithmic trading. Their claim? Daily profits, up to 13% per month. Sounds too good to be true? That's because it probably was. Africrypt didn't simply gain traction, it went viral. From WhatsApp group chats to local news reports, their platform spread like wildfire among South African investors. Their social media feeds showed success: sleek Dubai apartments, rented sports cars, and branded polo shirts. To many, it didn't feel like a scam. It felt like inspiration. Within months, thousands had invested. Some users deposited modest savings. Others funneled in retirement funds. Even professionals, doctors, lawyers, and entrepreneurs trusted the brothers with their crypto. By early 2021, Africrypt reportedly controlled more than 69,000 Bitcoin, an amount worth over $3.6 billion at the time. That's more than the entire GDP of some nations. It wasn't just about the money. Africrypt promised empowerment in a country where the financial system had historically failed many of its citizens. And yet, no one asked for proof. There were no financial audits, no registration with authorities, just a dashboard and numbers that kept rising, until they didn't. Then, the magic started to unravel. Some users noticed their withdrawal requests were being delayed. Support messages went unanswered. Live chat disappeared. And then came the email from Ameer, addressed to all users. Our wallets and nodes have been compromised. We have been hacked. But it was the next line that truly alarmed investors. Please do not pursue legal action. It will delay recovery efforts. That sentence alone raised 1,000 red flags. Why would a legitimate company ask users to avoid law enforcement? If they were victims of a hack, shouldn't they want legal help? It wasn't a hack. It was a carefully timed goodbye. The day after that email, both brothers disappeared. Social media accounts? Deleted. Company phones? Switched off. Support lines? Dead. Behind the scenes, blockchain analysts were already tracking the digital trail. Thousands of Bitcoin transactions had been processed in the weeks prior, many routed through privacy-centric tools like Wasabi Wallet and Tornado Cash. These tools made it nearly impossible to trace the money. Funds were broken up, obfuscated, and layered through countless cold wallets. It wasn't just theft. It was a calculated disappearance, orchestrated by two people barely old enough to drink legally. They didn't just flee the country. They fled into the deepest shadows of the internet, where law has no reach and identity is fluid. As the dust settled, one question echoed louder than the rest. Where were the Cajee brothers? Interpol got involved. Red notices were issued. Flights were tracked. Bank accounts flagged. Initial sightings pointed to Dubai, a hotspot for crypto founders and billionaires. Then came whispers of Tanzania, Kenya, even Hong Kong. In a twist, The brothers resurfaced, but not in person. Instead, their lawyers released a statement. Raees claimed they had fled the country under threat, that unknown individuals had kidnapped their father and were targeting the brothers. Was it true, or just a diversion? Many believed the danger was real. South Africa's criminal underworld has long preyed on anyone with visible wealth. But if that were the case, why not cooperate from a safe distance? Why not clear their names through the legal system? Instead, they vanished again. No press conference, no refund plans, no direct word to any of the thousands who trusted them. South Africa's regulators found themselves helpless. At the time, cryptocurrencies weren't officially classified as financial products. That meant no oversight, no immediate legal jurisdiction. The Financial Sector Conduct Authority, the FSCA, couldn't act decisively. They couldn't issue arrest warrants or freeze crypto assets, even if they wanted to. Private law firms stepped in. Civil litigation was launched. Africrypt's assets were frozen by court order, but they were already gone. Of the 69,000 bitcoins reportedly under management, only a fraction, around 66 million rand in claims, or $4 million, were formally filed. Some believed investors were too embarrassed to come forward. Others suspected much of the crypto had never existed in the first place. Then came a strange twist. A Dubai-based company, Penathan Project Management LLC, offered to settle with investors. Why? They had no clear ties to Africrypt, and yet they offered to pay out about 65 cents per rand to investors who opted in. Was this a PR move, a backdoor insurance deal, or hush money from someone behind the curtain? Africrypt wasn't just a scandal. It was a symptom of something larger. The case laid bare the dangers of unregulated digital finance, a system that moves faster than the laws written to govern it. It was a modern-day gold rush, where code replaced currency and charisma replaced credentials. We've seen it before. BitConnect, OneCoin, Celsius, even FTX, all with their own empires, false promises, and dramatic falls. But Africrypt hit differently. It wasn't a faceless corporate collapse. It was personal. Two local teenagers, born and raised in the very communities they ended up defrauding. The lesson? If someone guarantees high returns with little risk, especially in crypto, walk away. Because in this world, the line between innovation and illusion is razor thin. What really happened behind the scenes of Africrypt may never be fully known. Were the brothers malicious masterminds, or were they two young men in over their heads, trapped in a scheme that spiraled too far? Raees insisted the reported $3.6 billion was exaggerated. According to his affidavit, the real figure was closer to $1.1 billion, about $70 million. Yet blockchain analysis suggests a much larger volume of transactions. And even if the number was inflated, it doesn't excuse the silence. Some investors say they were repaid, at least partially. Others never saw a cent. Meanwhile, international authorities are still tracking wallet addresses across the Caymans, Zurich, Singapore, and beyond. In a decentralized world, truth is fragmented. There's no central record, no singular authority, only trails of encrypted code and broken trust. In the digital age, where wealth is built on digits and belief, trust is no longer just a virtue, it's a form of currency. And once that currency collapses, you can't rebuild it with code or coins. This was Africrypt, a story of ambition, illusion, and silence. An empire not made of steel or stone, but of software, speculation, and shadows.